Hello, welcome from Trend Signal for our review of the data and events of the week beginning the 3rd of April. New month, new quarter, Q2 in the calendar year. Equities did pretty well in the first quarter. The S&P 500 in the US posted its best quarterly performance for some 12, 14, 15 months, in fact. FTSE for the last quarter was up 3.25%, but it was the DAX in Germany up 7.6% as money continues to pour into the Eurozone equities, I guess sensing a general improvement in the Eurozone economies, really. And the DAX on Monday approaching its all-time highs, so much of the same on Monday. I guess Q1 was dominated by the new administration in the White House. One only needs to look at any newspaper here, the headline on the Financial Times on Monday. A lot of smoke, maybe more smoke again, and not a lot of fire. I think March saw Fed surprise the markets with slightly dovish reading on the US economy. Trump misfired a little bit in Washington with his Affordable Care Act reform, which even failed to make the vote in Congress. So could do better, I guess, is the summary there. Q2 looks interesting, with the first round of French elections on the 23rd of April. The main contenders being Macron, Le Pen and Fillon. Polls suggest Macron and Le Pen will go into the second round in May. Chances of an upset second round, slight, but polls are polls, and already here a comment on Bloomberg saying that Macron says those who doubt Le Pen are like those who doubted Trump. Of course, he would say that he doesn't want any complacency whatsoever there, but it's going to be a very interesting lead up to the second round in May. The overnight news, as we've just seen, certainly from the Financial Times perspective, focused on Donald Trump and his first interview with them as the president, and the headlines of that interview focused on North Korea and the administration's possible solutions to deal with the potential nuclear threat. Trump's meeting with China's Premier Xi Jinping at, well, it's called the Winter White House, I think, down in Florida this coming Thursday will be very interesting. Trump says the US will ask China's help and will deal with North Korea with or without China's help. So that'll be an interesting meeting that takes place. I think he's quite a pragmatist, Mr. Trump, and I'm sure he'll work out the best way of approaching that. Anyway, let's have a look at the data and events this week, being the first Friday of the new month. That heralds the release of the US employment data from the previous month, or non-farm payroll as it's called. Let's just quickly review the data coming out. Let's just refresh my screen so we can get everything up to date there. We have bank holidays in China for the first 2 days this week, Monday, Tuesday. Tomb Sweeping Day. There you go. That's a rather bizarre name for a bank holiday, but I think a better name was Ancestors Day, which is the more modern alternative. We've already seen data come out, slightly disappointing manufacturing PMI reading from the UK, weak retail sales in Australia, and a strong-ish reading, actually as expected reading, I should say, from the Institute of Supply Management Manufacturing PMI in the States. So that put to bed, we can focus on Tuesday's data. We got the Reserve Bank of Australia rate decision, weaker retail sales that we've just been talking about won't have helped things on Monday. I expect, and the market expects, rates to be left on hold at 1.5%. We also have UK construction PMI coming out at 9:30 Tuesday, 52.5 last, unchanged at 52.5. Anything above 50 means that sector is expanding, so that still can be regarded as a positive number if it maintains 52.5. We then jumped to Wednesday, where we have the PMIs for the service sector, so the Purchasing Managers Index report for services in the UK. Well, we've already seen the downtick in the manufacturing, where we're expecting an uptick. We're still expecting an uptick in services. Services is obviously by far and away the biggest sector, way, way bigger than manufacturing. So it'll probably garner more reaction if it does beat expectations in any meaningful way. We then have the first reading for the US employment data from the private payroll company ADP. That's 1:15 on Wednesday. Notoriously volatile, nevertheless, very strong figure the previous month, looking for a more restrained number for new jobs in March this time round. We then have the US version of our services sector reading on the PMI front, referred to as non-manufacturing. We call it services, which is what it is. 57.1. Well, they've already beaten it on the manufacturing side. Maybe they'll beat it on the non-manufacturing service side. But 57.1, a downtick from last month's numbers. Crude oil inventories, as usual. We've been in slight drawdown mode. Certainly the stock's not building anything like as fast as they did in the first 3 months of the year, or first 2 months of the year, I should say. So that'll be interesting for the oil market as it rebounds from its lows of a week and a half ago. We got the minutes from the last Federal Open Market Committee meeting. Any insight into the Fed's thinking re-rates is always interesting for the markets. 7 o'clock in the evening on Wednesday. Some people tend to forget about it being quite late, but don't let that catch you out. Nothing Thursday, apart from the weekly unemployment claims. Friday is the main day, really. We've got manufacturing production here in the UK at 9:30, but the main event, non-farm payroll from the Bureau of Labour Statistics. Like ADP, we're expecting a lower number from last month's heady 235,000. 176,000 new jobs created in March is the prediction, with the headline employment rate at 4.7% unchanged from the last month. That's it. Those are the key ones. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.